Joining me now, the so-called Dean of Valuation, Aswath Damodaran, NYU Stern School of Business, a professor of finance. Good to see you today. What do you make of what's happening, especially related to mega caps and the growth trade?
I think it's in a sense a correction that we've been waiting for all year because people have been warning us about this. But I think that, some perspective is needed here. I mean, you look at these stocks, clearly the last week has been horrific. Look at them again, a month ago, again, horrific. But you go back to the start of the year. I mean, come easy, go easy. You've added trillions in market cap. You're losing $1 trillion in market cap. So from that perspective, I think some of this cleaning up is long overdue. So I'm not surprised. I'm just surprised it happened so quickly and essentially in such a compressed time frame.
Yeah, the interesting thing of speaking with you, of course, is you're not only a trusted observer, you're a shareholder in many of these companies. So take me inside your own head today on how you're looking at this pullback, whether it's an opportunity you see or you're simply waiting because you think more is to come.
No, all year I've been saying I would not buy these companies at prevailing market prices starting in March, other than Tesla, which I added earlier this year. At the same time, though, I would not be in a hurry to sell them because I think they remain. I mean, in spite of all of the bad news you've heard about them in the earnings reports, they continue to make money. It's relative to expectations, they might have underdelivered. But look at the revenue and earnings numbers. They've come in surprisingly close to expectations outside, again, of Tesla, which had that underperformance in earnings. I just think the mood has shifted. What would have been good news 2 months ago is now bad news. And that's the nature of markets. No, and I'm letting it ride in my portfolio, and there's pain in my portfolio, but again, with perspective, I'm okay with that pain.
When you heard about the Berkshire move in Apple, your reaction was what?
I think that Berkshire is just overinvested in Apple. Any company that ends up with 30% of its portfolio in one company is asking for trouble. That's always been a problem. I think that I'm glad they got out from under the problem before it was, in a sense, too late. So I think they were dealing with a portfolio concentration problem. And I don't think of it as a signal that they think Apple is overvalued. I just think it's a signal that having 30% of your portfolio in one company is never a good idea.
Well, I mean, they certainly enjoyed the fruits of the run on the way up.
Yeah. But I think it is, you don't want to risk an entire company on one stock. And I think that's always, even when times are good, it's never a good idea. So the fact that they made money on it doesn't take away from the fact that strategically and tactically, it was a bad idea to have that much money in one stock.